Yo, good morning, everybody. Happy Wednesday. Welcome to Pre-Market Prep. Spencer Israel. I got Joel Elconin and Dennis Dick with me today. We're going to talk about yesterday's market, yesterday's reversal, how that came about, how Dennis traded it, and what that portends for today. Speaking of today, we do have another big number at 8:30 PPI out, so don't forget about that. We'll talk earnings. We got JP Morgan, Delta Airlines, Bed Bath & Beyond, BlackRock. Today is what I'm calling the unofficial start of earnings season, though things won't pick up really until next week or so. Frank Holmes is our guest today, U.S. Global Investors. We're going to talk all about the airlines with Frank. He, of course, runs the Jets ETF. He'll help us break down that Delta report, but also help us understand what is going on with the Spirit, JetBlue, Frontier, menage a trois. I don't really know what's going on there. So that'll be at 8:35. So do us a quick favor. Hit that like button, please.
There are no guarantees in the market.
Thank you to all the likes. We appreciate that. Let's start the show. Here we go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, Mr. Elconin, how are we doing today?
We're doing okay. This is going to be a good one. I'm looking forward to the show today here. We had a little rally, but we faded hard. We're up 7 handles exactly at 4,400. 28 and a half handles off that pre-market high. That's not good. Pre-market low right there with the close, 93 and a quarter. Crude continuing to rip up $1.36 at 101.96. Gold working its way through to 2K, up $7, 1983.10. Silver in the green, trying to get into the 26 handle, up 19 cents, 25.92. Bitcoin can't decide what to do at 40. It's up $525 at 39,815. And Ethereum futures, they are in the green by $55.50 at 3,022.50. Here we are on synthetic. What? Today's Wednesday, synthetic Thursday, right? Because we don't have no school on Friday.
No school on Friday. Well, yeah. Even Dennis has no school on Friday.
Oh, yay.
Yeah. Right. Yeah.
I think so.
We trade to Canadian markets, Dennis.
We have Good Friday. We have Good Friday. Canada participates in this one.
I know.
We participate
in
this one. Yeah, no, we participate in this one. We're in.
That's good. All right. So let's start with yesterday. Dennis, we spoke on yesterday's show, if you recall, about what Joel said, what would screw the most people, and it was a rally. We off of the CPI number. We got that rally at 8:30 until we didn't anymore. So I'd be curious to hear your thoughts on yesterday's market reversal.
Well, I tweeted out when we were trading up, I said it's a great day to sell stocks. So again, we just keep seeing the same story here as rallies aren't holding. There's a lot of reasons for that. One, we said the number wasn't good. We said it on the show that it's like, okay, well, it wasn't as bad as some people had feared, but let's put it in perspective. It's not good. And that's why after the show on my Twitter account, when we were trading up 30 handles on the S&P, I tweeted out, it's a great day to sell stocks. I went and sold some more stocks yesterday. I'm up to 51% cash now in the long-term account.
Wait.
Trading always, but I keep raising my long-term cash.
Just buy more? Like the last week?
Yeah, remember I bought bad. I bought all that crap.
Yeah.
You know, some of these growth stocks that you think, okay, well, maybe I'm wrong. I should get some growth stocks in the portfolio. Well, I'm wrong on those. So I had bought Asana, ASAN at 40. It went down to $33 there, and obviously you're wrong. Bounced up to 37 yesterday. I sold 37.40. I got out of it. Eat the loss. $2.40. Eat the loss. Move on, because you know what? And you guys on the pre-market show were talking me out of the Asana investment already. So it was a gift yesterday. It's another gift. We keep getting gifts of these overnight rallies, and they don't hold. I mean, it's tough to be a bull in this scenario. Rates are going up and they're going to go up fast. Inflation is still rampant. Inflation is going to come into check. It's going to come into check because we're going to push the whole economy into a recession. I mean, that's what's happening here. So recession-proof stocks, money's been going into. You look, a lot of these growthy names are not recession-proof. It's a tough market to, maybe if you got a 10-year time horizon, it's a different market, but it's tough to just say, I'm coming in, it's all going to go right back to all-time highs. I don't see the case to take the market to all-time highs, and I don't even think the S&P is down that much.
It's
We're
not.
talking
Really
about 8-9% off the highs.
I know. Nothing.
It's like so many chances to get out of all of these stocks. Need to take some of these chances and take money off the table. Again, you got to use the days that we're trading higher, not the days that we're trading lower. If you were trading an hour ago, we had a nice rally. It's gone again too. So I'm trading what's in front of me, and what's in front of me is telling me sell the rip is working better than buy the dip ever did.
Yeah.
That's it.
That's it. And the same goes for any hypothetical pop that we could potentially get today off of. PPI is a big number now too, right? It's inflation on the producer side, and expectations are high. And if we pop, and I think it's logical to say that today could be.
I don't know. Today people aren't going to be fooled, man. Today,
No, they are. They're fooled every day. It's the dumbest market, man. It really is. There's just so many people out there that in institutional money managers that have absolutely no idea how to navigate a bear market because we haven't had one for 10 years. We had pockets when the markets fell in March of 2020 for 35%, but what happened? We bounced right back. People just think eventually if you buy the dip long enough, eventually you're rewarded. And you know what? In the long term, in certain stocks, that probably works. In SPY, that probably works. But in some of these smaller stocks, it doesn't work. I retweeted a tweet last night from the financial crisis because everybody believes eventually I'm going to get my money back. Everybody believes that. 99% of investors believe that. And in some cases, it is the truth. In a lot of cases, though, it's not. And if we look, at this tweet from last night, it was by Bill Mann, I don't know who he is, but I was retweeted by a person I follow, Better Phils, who's an excellent follow on Twitter. But it was just showing, if you had bought all of these darlings, and Joel, here's a blast from the past. I got a list of 10 stocks from the year 2000. Ariba, remember Ariba, ARBA?
Yep.
Remember Island, Digital Island? Remember there's a bunch of VeriSign, VRTS, SNRA, MERQ, INSP. These were all, and this was a Kramer list of all the growth stocks that are going to carry us through the 2000s and into the future. And maybe this is just, they're just like, but they're showing a list here. And on that list, these stocks, a lot of them fell 90%.
Here, I'll pull it up on the screen.
Pull it up.
Yeah.
And again, maybe we're cherry picking, but I tell you, there's a lot of companies like this, At Home, Excite, all the, Yahoo, really, AOL. I mean, there's so many companies that are like this. Lucent Technologies, most widely owned stock. But when you're paying ridiculous high multiples, here you are, 20 years later, a lot of these companies actually got bought out. A lot of these companies, look how many got bought out. But you still lost 94% from the highs because that's where they got bought out, was 94% down from their highs. Like Lucent Technology, Alcatel-Lucent, got bought out at $2. Well, the high was 110. So, I mean, you still lost 98% of your money. So the buyout could come. It could come at a lot lower prices. So just showing you that just because your stock, they don't all come back. The S&P likely to come back. The Q's likely to make new all-time highs eventually at some point in the future. Is, VeriSign, Ariba. There's a million names like this. And most of them in the ARKK portfolio. I'm going to say a lot of these are likely going to continue to go lower. So you've got to look at valuation. Valuation matters. Buy real stuff. Don't go out and buy hopes and dreams and NFTs. Buy real things. And if you've got to buy something. But right now, I think we're going into a full-blown recession. So I don't mind having half cash. You can laugh at that, but the evidence shows that we have a lot of trouble ahead. We have inflation rampant, and the Fed's trying to catch up. They're going half. They haven't gone a half in 20 years, Spencer. What does that do? What does that do to the person who's got a variable rate mortgage? They have less discretionary income. Means they're probably going to spend less.
I'm sorry, but who in their right mind has a variable rate mortgage with rates?
I have a variable rate mortgage. I have one that I just took out on one of my rental property. I have one.
All right, but with
you know why? You know why I have a variable rate mortgage? Because it gives you flexibility. You get the flexibility on paying it out. Yeah. I'm telling you, there is a lot of people that have a variable rate mortgage. Maybe you don't.
No,
but
well, I don't have any mortgage, but I just would have assumed that with rates at the floor like they've been, you get a fixed rate mortgage.
But there's flexibility in variable. There's a lot of other factors to consider when you're doing different rates. It's absurd to think that nobody in the whole USA has a variable rate mortgage.
Some people.
That's an absurd assumption.
Some people, yes. Obviously, I'm not.
There's a ton of people that have a variable rate mortgage. And what happens when your 5-year fix comes due? What happens when your 5-year fix comes due? What if you're 2-3 years in? What if you're 4 years in? And your 5 years coming due next year, and your payments are going to go from 1.5% or 2% up to 3 or 4 or potentially 5%. Yeah. You're going to have less discretionary income. It is going to hit the economy. It's inevitable. Unless they decide all of a sudden that we're going to stop raising rates and inflation just magically disappears, the recipe adds up to less spending out there. I mean, and that could add up to a potential. That could add up, obviously, to a potential recession.
One of the factors, not the only factor, but one, and we'll get off this conversation in a second here. But one of the factors contributing to inflation is the war in Ukraine, and if that were to end, that would theoretically could ease things up a little bit, right? So let's keep that in the back of our minds, right? It's not.
I think they're going to get inflation in check. I think they're going to get inflation in check. I think it's going to be painful to do it, though. I think it's going to be painful, and I think that I see S&P 7, 8. What are we off the highs, Joel? How much are we off the highs?
400 points.
We're off 10%.
Yeah.
There's a lot of bad crap happening to only be off 10%.
I agree.
A long-term chart on the S&P just to give perspective, because people are buying this dip saying stocks are cheap. Bring up the S&P chart, the 10-year chart. Bring it up.
Yeah. I mean,
this is the cash.
We're way up there.
Does that look cheap?
No. It's been an amazing decade. What can you say? I mean,
it's time to take profits, folks. It's time to ring the register on what you can. There's a reason I've went up to this much cash. It is time. It has been an amazing decade. Those Goldilocks periods are over, at least for the short term. It's absurd to just think we're just going to continue to go up and up and up forever and expand this bubble. The expanding bubble was built on free money. Free money is not as free as it was 6 months ago. So I look at that chart and I think, let's ring the register. Bring up Apple. Why rang a little bit of my Apple?
Well, can I just say that this kind of looks like on a monthly chart a head and shoulders top? You got
that too.
Left shoulder, right shoulder.
Yeah, none of it looks good.
Yep. Okay, let's go to Apple. These are monthly charts.
I am not short. Gaming World. I am not short. I am 50% invested still in this market. If I thought the end of the world was coming, I would be short this market. I am not short this market. I'm not talking my book. I am simply saying that if you're sitting with 100% or on margin, you need to raise cash, in my opinion.
Margin. I don't know if anybody in this entire show is on margin, heavy margin.
I guarantee you there's people, and I hope you know that.
Heavy margin? No way. Heavy. Come on.
There's people that are on margin. There is. Don't kid yourself. I don't think you should ever be on margin. I don't think there's any reason to invest on margin. But
if you're on margin, then you're not listening to the show. You're not listening to the content.
But also, margin could just be, a bunch of options positions, because that's leverage. Well, it's not margin.
Well, no, if you pay cash for your options, then it's not margin. If you're short options,
sure. Okay.
If you're short puts,
the point of the story is you have a chance to sell near all-time highs. I look at that Apple chart. 40 to 160 in 2 years. If I didn't have this huge capital gain on Apple, and like I said, it's a stupid reason maybe to hold stocks, and I might regret this, I would be selling Apple hand over fist if I owned it. If I was sitting at 160, I'm not buying and putting new money in Apple at 167 when it's trading 28 times earnings. We don't know what the next big growth engine is. And the things went up 300% in the last year. It's been just a great move. It's been a great decade. Spencer said it perfectly. It's been a great decade, but the thesis has changed. And again, inflation will get in check, but I think it's going to be rising interest rates that brings it in check. And that is going to be painful for everybody in this market.
We'll see. I mean, for every data point that you can bring about why we're heading for a recession, I can bring one that says why we're roaring back. Right?
Please tell me those.
Yeah.
Okay.
Tell me. I'd like that to know that right now.
Here's one from today.
Give it to me. Give me the bull thesis.
I'm not giving you the bull
I'll
thesis.
change my mind.
I'm not going to give you the bull thesis for the entire economy, but I'll give you the bull thesis, one of them for airlines here, okay? The CEO of Delta Airlines, Ed Bastian, said today the last 5 weeks have been the highest bookings in the company's history.
People want to get out, travel before the end of the world.
No, it's the reopening trade. People have been cooped up. It's no doubt that there's a reopening trade there. Is that last though? That's the question. Is that going to last? I mean, you had the home builders that had their greatest quarters, and we were buying these home builders up. You know, the market was buying them up 4 months ago because KB Homes. Look at January. Look what it did in January. It was the greatest quarter for KB Homes, like one in the history of the company. What has it done since?
Well,
so I think you're selling the pops here. I don't think you're chasing stocks and saying that everybody's going, you know, I think people want to do stuff. I think they're going to have less money. My point is, I think people are going to have less discretionary income, and that's going to mean less trips, you know, less toys being like new cars, new houses. You know, food stocks going to do fine. Walmart, Target, those are recession-proof stocks. There's a reason those are going up too, even Coca-Cola to a certain extent. But there's been a lot of free money out there, and that is going to slow down. That's my point. You can do what you want. Everybody can do what they want. I told you what I'm doing. People ask every day, what am I buying? I tell them nothing. And I did buy stocks 2-3 weeks ago. I was wrong on all of them. Wrong. You know how I knew I was wrong? I started losing money. So what I do, I sold those stocks back and brought my stuff back up to my comfy 50% cash. If the market takes off and I'm wrong, I'm wrong. But I don't see the thesis that we're just blasting off and going back to business as usual. I just don't see it.
Wait, sorry, go ahead, Joel. I wanted to.
I would just gonna comment on the price action here in Delta, and you know, up to 46%. Just something going on 4150 here, just under 4150. So keep an eye on that. 4105. We've made 3-4 attempts on that. If they can blow it through that somehow, some way, man, palms out at 42. That was a high back in February, another high just above 42. So from the long side here, man, the longer it takes to like clear 4145, 4150, I'd be worried about a little bit of a fade in this one. But right now, momentum of the upside, nice volume, Delta. I mean, good numbers. People do want to get out.
Selling the rep has worked again and again and again in this market. I mean, Twitter, again, I was saying I thought I'd buy it at 45, but you can just see like the Musk factor is even, it's almost filled the gap. Is the Buffett, Pop, and Hewlett Packard going to give it all back? Because it's given back over half of it now. So I get this Delta pop. Does it go to 42 or 43 today? Maybe. But if I look at it in 2 weeks, is it still up here or is it back down to like 38 or 37? I think the latter. So I think if I'm in it, am I shorting it? It's hard to short stocks. The short squeeze has been vicious. But I'm just saying I'm using the pops to get out of stocks.
And when I quoted the CEO of Delta just there, I wasn't necessarily trying to make a bullish argument for the airlines. Obviously, there are serious concerns there, rising oil prices, and 2 airline companies just said this week, or was it last week? I don't even know anymore, that they're reducing their capacity through the summer because they don't have the labor. So there are overhangs here. But from a pure consumer spending standpoint, the CEO of a major airline, I think the largest airline, saying the last 5 weeks have been the highest for bookings in their history, I think is an argument in favor of the consumer right now. That's the consumer though, not the company, because there's other things
Yeah,
on there.
but I'm always trying to think the big picture. Like, what's the little guy doing? What's the person doing? People have not been hit hard yet. Their variable rates have not gone up. We went up a quarter of a point. People have money today. I'm trying to look at where they are in 6 months. Do they have the money to continue to go on their trips? Are they going to Disney World? Some people, guaranteed. Are some people going to be stretched more, though? I think so. And I think that leads to less attendance. I would love to buy Disney. Disney's at a huge support level, Joel, 130. I think Disney's got good value. I think if you're buying Disney and putting it in your long-term portfolio, 10 years from now, you're going to be really happy. But I'm just thinking 6 months from now, I think I'm going to get the stock cheaper because I think we're kind of in still the Goldilocks. We haven't been hit with the rising interest rates yet. We really haven't. I mean, yeah, they've priced it in, but you know, your Fed has only went up a quarter of a point so
I don't
far,
know,
so we
Joe.
haven't really got
man.
hit yet.
Everyone that owns growth stocks, I think they've been hit pretty hard the last.
No, but I'm not talking about half the population doesn't own a stock at all.
Okay.
So these are the people, there's still half the population that drives, the economy. There's, a lot of people that are just paying the bills. And maybe those people never were, spending and going on fancy trips, but some of them were because we had some good times with stimulus. We had a little bit extra money. There was opportunities. And I think those people haven't been hit yet, but I think the hit is coming. I think as we continue to raise rates, people will be like, I just don't have the money for that rate.
I
just don't have the money for the new car rate.
Hey, Dennis, I want to ask wait, hold on one second, and then we can go on to some other things. I just want to ask a fundamental question on the whole recession thing. What is one of the key leading indicators of a recession, or what happens during a recession? What indicator
growth slows?
Well, what else?
Growth slow.
Well, they're the official, but is GDP slowing? Okay.
Yeah.
But it's right. Isn't it rising unemployment? Right.
Or not necessarily. It could just be slow job growth, right? It doesn't necessarily have to be like rising unemployment. It could just be slowing new jobs.
Well, I'm just trying to figure out how, what the recipe is for a full-blown recession with unemployment at 3%.
Hey.
And that might be the case, but is unemployment really at 3%, or are some people just not willing to work?
Okay.
No, seriously, are some people? I don't want to go work for $15 an hour. I mean, that's why Target has raised. Somebody in the chats is raising prices, raising labor prices, trying to catch up.
We're going to go in circles here if we're just going to cast doubt on that number.
Wow, what's up to that? I mean, I know we were going down before, but now we're really going down.
Yeah. They must be listening to pre-market prep.
Yeah,
the Spoons are listening to pre-market prep.
All right. Well, you know what? Here's an argument. If I can bring it back to the earnings here, here's an argument for Dennis. All right.
You don't need to give Dennis fodder for an argument.
I know.
Okay?
But, I gave a quote that I thought went against him, and I'll give a quote that goes for him. This is from the Bed Bath & Beyond conference call, which is happening right now. The CEO said that industry trends have worsened since February as the macro market volatility and overall consumer uncertainty has surged. There you go, Dennis. All right.
I'm just giving an opinion here.
These
and
are
you
facts.
know what? If I really thought that this is really going to get, if I knew for certainty that this was going into recession and the economy was going to be in trouble, I wouldn't just be 100% cash. I would be short the market. So I obviously know nothing for certainty. I'm guessing, but I'm guessing with caution. I'm usually 20% cash. You are too, Joel. We always got a few blanks. I have more cash right now because I'm uncertain about the market that we're going into. And I'm just saying, if you're 100% invested in this market, I think the time is still now to take some profits. That's all I'm saying. So I think we're going into a recession, but I could be very wrong. I might be wrong. I'm wrong every single day on individual calls. Last week, 2 weeks ago, I was like, well, maybe I'm wrong, and I started buying some growth stocks. I was wrong.
You're wrong about being wrong.
But you've got to make calls, man. You got to, we're money managers. We're doing this for a living. I could sit back and just buy SPY every time it pulls back, but this is my job. And my job is to make calls. My job is to try to be a market timer. I'm a market timer. If you're not a market timer, do what you got to do. You can buy dips and eventually the market goes up. But if you're buying all these growthy names at 100 PE in this environment, I think you're going to lose money.
All right. Quickly, let's just do run through the earnings. Well, we did Delta. J.P. Morgan reported this morning. This is an
Oh,
interesting report
this is
because
bad.
I was curious to see what kind of charge they were going to take as it pertains to the whole Ukraine war.
Mhm.
So they're saying they took a $524 million loss, which actually seems like not that much to me, if I'm being honest, due to Russia's invasion of Ukraine. As it pertains to the raw numbers, again, I don't think these numbers are as relevant now because the macro situation is so uncertain between the war and rising rates. But their EPS on an adjusted basis came in a little bit light. Sales did come in a little bit higher than estimates. But I'm more so interested in what Jamie Dimon has to say today. I haven't seen what he said yet about the forward-looking environment.
I mean, the price action in this has just been horrible. I mean, we've commented about this, repeatedly. So this is a feather in the cap here for Dennis on the recession end, and you have to just acknowledge that we're supposed to be in a rising interest rate environment, and which is supposed to be good for banks, and they're going in the opposite direction. So. Sitting at the lows of the pre-market session, if there's anything you've learned from listening to this show, besides not being on margin, is when you're looking at your bottom right chart here, your lower right chart, and you get into an area where you have a lot of air, right? Okay. They tend to go quickly down through that area. So, is it going to find support at this monthly low? Well, we'll find out. 123.77. Not going to find out today, but then you would need to form a base there. I don't know. What about this is crazy, Des, because I know we always talk about the COVID low, and it kind of it was kind of a fake low, right? I mean, maybe it was, maybe it wasn't. And now, wow, this got under, this is getting about 125. That is 50% of
I'm
that
long
whole
it.
move.
I'm long. Another loser. Look, every stock I buy, I lose money. Why? Because they're all going down. So I I think JP Morgan's a great company. I stuck a half size position in the long term portfolio because I'm underweight the banks and I want a position. I took it through the earnings report, and right now it doesn't look great. And maybe I'm going to lose some money on this. You know what though? JP Morgan, I'm comfortable that if I'm in JP Morgan, that it's going to eventually come back. Where if I'm in like Fubo or I'm in like, I'm not comfortable that those stocks are coming back. Like Asana, where I bought it trying to time the move, thinking, okay, well, I'll get a little bit of growth in there. And, I'm not comfortable that that stock's going back to $160. I'm not even comfortable it's going to get back to 40, which is why I took the loss and sold at 37. JP Morgan, Disney, these stocks, you're buying these, sticking in your long-term account, you're probably going to be okay.
It's 8:29. We're 30 seconds away
Oh,
from
yeah.
If you are interested in that, we'll probably give you the number as we get it here. Producer price index, inflation from the other side of the coin.
Now watch this be a whopper here.
We'll
Okay.
see here. Estimates are for PPI to have risen in March 10.6% year over year. Core PPI, which is discounting for energy, 8.4% is your estimate for today. Let's see what we're going to get here in a few seconds on this
It's a
March
little hot. It's hot.
PPI number.
It's hot.
Yesterday's number, recall, was right in line with the estimate CPI. PPI.
Feels a little hot right
I
now.
didn't turn Charles the squawk on, so
Okay.
sorry. Come on, I'm waiting for my screen to refresh.
The first gut reaction's been lower here, so just a little bit. We're hanging at the lows. We went to 85 and a quarter. Come on, I think or else someone just jumped the gun here. We'll see if we can. I'm keeping an eye on the close, even though we went through it like silly putty so many times here.
All right.
43.93.
So on a month-over-month basis, which I gave you the year-over-year estimate, but the month-over-month estimate was 1.1%. The actual was 1.4%. So we did come in a little hotter than expected month-over-month in terms of PPI. Year-over-year, for core, 9.2%. I gave you the 8.4% estimate, so hotter than expected. Looks like is the big takeaway here for producer prices in March, year over year and month over month, core and non-core. Looks like all coming in at the very least in line or above estimates. So yeah,
It's a battle. I'll tell you here, it's a battle. It's
not the
really,
CPI number though.
it's
yeah.
not. It's not.
So there's a little bit of movement off of this, but it's not like whoa,
No,
we didn't see
no,
this coming.
very muddled.
Yeah, it's quiet. I mean, but put you have a perspective. Bring up today's chart. I mean, this has been a non-stop leaker market for the last 2 hours. I came in this morning, and I'm getting, like I was a little bit net short of my overall account, not much, but I'm usually hedged. But I was leaning a little short. And I was like, holy mackerel, another rally. But I mean, now it's just turned around and done the whole thing again. I mean, these overnight rallies just don't hold. They're not holding. There's money managers that come in and think about it. A lot of money managers aren't trading at 2 o'clock in the morning. The big money managers, are not getting to their desk until like 9 o'clock, and they might start trading. They're probably trading the open at 9:30. And what do? They get these rallies overnight and they start coming in, or maybe they were coming in an hour ago and they start coming in and start selling some stocks. It's a tough market. They're just not holding rallies. It's giving more proof to my thesis that this market is banking on not being a soft landing.
Yeah.
Yeah, JP Morgan, minor lift off that. So we'll see. We'll see if it can hold the pre-market low. Trying to get back on changed here. There was a real battle there. Thought we might take a look at Tuesday's low. I think that would be the trap door on the downside, 43.75.5. And now just trying to go green here, right? It unchanged. So all the information, all the earnings, the PPI, pretty much flat here on the session.
Can we talk about the JP Morgan numbers? Like, because we mentioned a couple
Yeah,
times. I don't
yeah.
think you ever gave the numbers.
I went over them briefly. The EPS for the last quarter on an adjusted basis was a little bit light, but $2.63 versus a $2.73 estimate. The sales was a slight beat. 31.59 versus $31.14 billion. So again, but I'm not sure how relevant those numbers are. Oh, they did also authorize a new $30 billion buyback effective May 1st. But
and they hit it on this.
Yeah. But again, it's to me, it's more so about like what they say going forward than it is about.
It just seemed like the mentality was there to hit this. They just, people stuck since the last earnings there. That little pop off that PPI that was faded there. So maybe I don't know. Once again, longer term number here. Your January of 21 low was 123.77. So that would be my next downside target.
And
I don't know about today, but longer term, looking for 124.
And let me
Franz saying just in the chat, just read it there, and I'm sure he's just taking this from the quote. JP Morgan shares fell 3% in pre-market trading after the bank reported 42% decline in first quarter profits stemming from increased costs for bad loans and market upheavals tied to Russia sanctions. None of that sounds good.
No, okay, so I mentioned the $524 million loss as it pertains to the Russian invasion of Ukraine. That's a one-time charge. That's not a going forward thing, right? They dramatically cut their exposure to Russia. That's not going to be a continuing thing here going forward. That was a one-time expense for them. So that's not a forward-looking thing. But yes, it's going to weigh on last quarter for sure. That's why I don't think last quarter is as relevant, because they have this one-time thing. But going forward, I just want to hear what Jamie Dimon says. I haven't had the chance to. I don't even know if the call is going on right now. What does he say about the economy? Right, that's what I want to know. And yes, their trading revenue was down year over year because last year was bonkers, right? So their trading revenue was down year over year. They took this loss. So yeah, there are some things weighing on last quarter, but I don't know. I just don't see it as relevant. Real quick, I want to give the Delta Airlines numbers quickly, and then I want to bring on our guest here. Delta Airlines earnings per share, slight beat. They're still in the red. They're still losing money on an EPS basis per quarter. They lost $1.23 per share, but it was 14 cents above the estimate. Operating revenue, $8.2 billion, which was a little bit on the light side. They did say they have 84% of their capacity restored compared to the same quarter in 2019. Revenue compared to 2019 is about 95% recovered. And I mentioned the stat or the quote from the CEO about the last 5 weeks being the best in their history in terms of bookings. Here to help us analyze the airline's Delta, and then there's some other things to discuss as well. Is Frank Holmes, the CEO and CIO of U.S. Global Investors. I see his camera is off. Frank, maybe are you going to turn the camera on for us? If not, I'll bring you on audio only. Let's see if he's here. Frank, are you here?
Can you hear me?
I hear you.
Can you hear me? Perfect. Listen,
Okay.
I'm at the ETF conference in Miami right now,
Oh man.
and the mic is not connecting well.
Okay.
So that's
Well,
why I just put it on. I did see my face. So I'll give everyone a photo op for the second, so I can. It's easier for me to hear you.
okay.
Putting the phone to my ear.
Okay. Well,
But
we can hear you, and that's what matters.
It's packed. People are just can't wait to get out and travel. Last week, I've been here for 10 days. I'm exhausted from being here, even though it's spectacular weather. But 30,000 people went to the Bitcoin conference. 30,000. The Uber costs went through the roof because there's not enough Uber cars from moving all these people back and forth to the convention center. Now I'm at the Fontainebleau for the big ETF conference, the first in 3 years, and they have over 2,000 people. Something like 800 registered investment advisors, and so it's everyone can't wait to travel. Most of them are coming from the northern cities like Chicago, Detroit, and New York and Boston.
Right. So, Frank, have you had a chance to catch up on the Delta report from this morning, or not yet?
Yeah, I did. It's it's on the positive trend, and they still don't have the biggest part of the business travel, which is the other component. And they're still keeping back to induce people to fly. The baggage charges are less, change fees. There's not changing fees. The airlines are all different, but they'll allow you to change your fees quickly. The biggest frustration right now has been the cancellations of flights, or they're trying to cut back on the number of options you have to fly to maintain a higher weighting in passengers in the planes. Is the biggest sort of headwind I hear. But otherwise, no, it's on the mend, and that's the most positive part.
What about like the consideration that if according to the CEO, they've just had their best 5-week period in terms of bookings, and yet that also coincides with this period of increased oil prices, and there's still the airline industry at large is struggling with labor shortages right now. So how do you square that circle with like the best 5 years, the best 5-week period for the company, and at the same time these negative overhangs weighing on the company? Or the industry, I should say.
Labor's an issue everywhere.
Right.
Labor's an issue everywhere. And a couple of the labor things were like in Chicago, where the airports themselves, getting workers to show up to handle your bags and to give you a cup of coffee, especially early in the morning. There was just not enough workers. So I think that we're going to see a big bump, this next wave of inflation being passed on to workers. It's just going to have to happen, and we're going to live with. I did a short clip back in August of 2020 of get ready for higher inflation, substantially, and that the CPI number that's used today has changed twice. And if you use the 1980 figure, which when inflation at 18%, if you use that algorithm today, inflation's 16%.
Yeah,
it's not even 8. It's much higher.
It is. It's 16.
All experience. So they've modified that algorithm the government has that basically understates what's hurting the wallet. So you're going to have to give out increased compensation to workers. And it's just, this is part of that whole inflation. So I launched another product called C, because what I learned from the Jets airline, and it's cargo, 70% ships and 30% cargo jets. And you're seeing some of the big airlines all of a sudden convert their passenger planes into cargo because the pricing power is so great. And they're basically inflation proof because they pass on any rising jet fuel cost to you. So if you order something from DHL and you want to ship to you, you have to get your own insurance on the product, basically, and you have to, especially when I'm getting big technology equipment, software and chips, etc., shipped. And further, it's in the clause is that all energy costs, any rises, I have to pay.
What's the symbol on that?
SEA.
Oh, well, that's an easy one.
and it's an inflation proof. You know, it's
Wow.
I thought I was worried. You know, I put up $5 million to get it going, and Citadel put money into, and all of a sudden, you know, it went up. Russia gets invaded, invades Ukraine, and all of a sudden, shipping of equipment and everything else went up. Can't fly over Russia now. So the costs, all those risks get embedded immediately and passed on. And that's part of the inflationary cycle we're all living with. So C has almost become an inflationary hedge. And in the analysis we've done, they've got this is a 3-year to 5-year secular cycle in shipping supply line constraints. And they keep telling every quarter, oh, it's going to resolve itself next quarter. It's just not going to happen. It's much bigger than people realize. And if you get into the themes of globalization, well, globalization is basically coming to a halt here, especially what takes place with China complete shutdowns. And then you have 31 cities in China shut down. You have Ukraine being invaded. This will have a great impact on shipping costs.
Right. So my question, Frank, is which is going to return to normal first, do you think? Shipping costs or consumer behavior as it pertains to air travel? And
American consumer behavior. American consumer behavior.
Okay.
One of the frustrations I will say, I just experienced as an American, I was flying back from Europe, Madrid, and you still have to get a test within 24 hours. So it doesn't matter if you're an American or you're a foreigner, only if you're in a crisis person being flown in from Iraq or from Ukraine, can you get immediately into the country. But Americans have to get a test 24 hours before landing. They won't let you take off from the plane. So that slows down the travel coming out of Europe. All the planes were packed going over, and there were about 60-70% full coming back. That's what I noticed. But the price of the tickets, they've rebounded. They're expensive.
Frank, the C has really come in. It started out at 19, and then I don't know, shot up to near 23 and change, and has really come back down to almost to like the lows of the. I mean, is it going to be a point where it just gets cost prohibitive? You know, people are not going to be able to. You know, it's no longer profitable for them to, be shipping this stuff with the increasing costs, because that's kind of what that chart's telling me.
I think you have a depression then, because there's just less ships. One of the big issues that took place is with the UN and global climate change, and they several years ago it came through during COVID that ships that had a certain crude oil were not allowed in ports. So
Frank, you've always been pretty optimistic, like during
and
the
you lost 25%.
You sound very,
I'm not
very,
a depression baby, but 25%.
So one of you go.
25% of the
Spencer,
ships
you're the moderator here.
There's no ships.
Yeah,
Frank, you've been on over the years, and you've been pretty optimistic, even like during COVID and different things and stuff. But like right now, I don't know if you heard Dennis earlier. You're making him look like an optimist. What are you forecasting here? I mean, no, I haven't heard you say a good thing, anything really.
I have said good things. I've said the only thing is flying back into the U.S. is a challenge, which they're going to have to resolve, which they will. But domestic travel in the U.S., it's booming. And the need for products and services globally, the shipping industry is in a sweet spot. They have tremendous pricing power because there's less ships. Okay. So if you think the ships are going to totally unravel, it's because you would have a depression. I don't believe that. Right. I believe that all governments will drop to MMT, modern monetary theory, of printing more money, and the rates will start to stall going up, and the government will quickly revert.
At a certain point in time, that probably does happen, Frank. Frank, multiple questions. What is actually in the SEA ETF? Like, what are the holdings?
Yeah.
Like, what kind of holdings?
You'd have, you have UPS, you'd have FedEx, you have DHL, you'd have the Japanese shipping companies, the Taiwanese shipping companies in South Korea. They're the big across the pond shipping companies. and the biggest would be out of Denmark. It'd be Missouri.
Yeah, there's a lot of global exposure here. I'm seeing it looks like it's mostly international. Frank,
Yes,
I just want to
and you
ask you.
couldn't.
I just want to ask you
Go ahead.
briefly about the airline M&A that we've been hearing about. There is a Spirit Frontier merger. Now Spirit supposedly rumored to be bought by JetBlue. What are you hearing on
Yep.
that front? What can you tell us about that?
Well, it's so exciting because during the crisis, we had new IPOs. We had new
Right.
Breeze comes out, and we had other anticipating the big turnaround. And now we're seeing M&A work. So that means the capital markets are robust with activity. The investment bankers are running all over the place doing deals, which they could not do 2-3 years ago. They couldn't think of putting these companies and merging them together. But today, that the capital markets are really, it's important that they're alive and vibrant. They're all trying to get scale. It's like the famous book Scale Up and what you have to do. So by putting those three companies together, I think that it'll have its challenges because they have different planes, they have a different concept, the integration of their different models from Airbus only to Boeing. There'll be issues, but they're trying to get scale for the domestic tourist travel, and they would be the biggest animal for that if they put those three together.
Well, so how do you see this playing out? Like, is it going to be a Spirit Frontier merger, or is JetBlue going to buy Spirit, or and if one of those things happens, what kind of regulatory hurdles are there? I would imagine if two of the largest low cost carriers in the U.S. merge, there's probably some antitrust concerns there.
Yes, there's so many complex moving parts. But the nice part, all I can think is Jessica owns all three of them.
That's true.
And the survivor will win. And for me, at this stage, and looking at this type of unique animal that Jets is that we have activity. People are vibrant. They're very bullish. They're doing this stuff to get quick scale because they're very bullish. And earlier I thought I sounded like a pessimist. I'm so sorry because
Okay.
no, I take my today is going to be a great and fulfilling day pill every morning.
All right. Frank Holmes is the CEO and the CIO of U.S. Global Investors. He runs the Jets and the CETF SEA. Also is the chairman of Hive Blockchain. Frank, always a pleasure. Enjoy the rest of the conference.
Hey, listen, thank you everyone for the opportunity to share.
All right.
And I'm a big believer. Buy in the dips and hold on.
Yeah, I know. Frank is give him credit. He's pretty consistent in his point of view. He's been coming on our show for a while. Even in the throes of COVID, he was bullish. Saying that
that was correct. And I mean,
yeah,
that there's a thesis, and there's a thesis that we're going to get through this, and there's a thesis that if the market tanks enough that they'll back off raising the rates. But right now, I mean, I just feel more comfortable with a little bit of cash.
Okay. Yeah, I don't necessarily want to have that argument again.
We're not going into it again. Don't worry.
Yeah. Okay. So let me make sure we did not cover Bed Bath. They had earnings this morning. I didn't even look at the numbers, honestly.
I want the numbers, actually.
You want the numbers? All right.
Yeah.
Pull them up.
It's down 14%. Let's find out why.
I'm having so I have 4 monitors here, and the monitor that has Benzinga Pro keeps like going on and off. So I'm gonna go pull it up in a different.
I can bring it up too.
All right, here we go. Adjusted EPS. What the heck? All right, that there must be some weird going on there. They lost 92 cents per share versus an estimate of a 4-cent gain. Is that holy moly? Sales is more comparable. Sales was a slight miss, 2.05 versus 2.08 $billion. It looks like they had a pretty rough first quarter.
Here's a fun headline. Bed Bath & Beyond from the conference call. CEO says, at this time, we do not have an update on the work done by our board to unlock further value at BBBY. Says the quarter-to-date comp sales are running negatively
negative 20% year-over-year
That's
sales.
Awesome.
Holy
Where's Ryan? Where's Ryan?
Oh, he's there. Don't worry, Joel. He'll buy more stock, so the stock will pop 50%. That's what happens.
Look at that. It's come off
Such
50%.
Look at how much of a gift. When your stock pops from $17 to $30 because somebody took a position in it, you sell it and you don't ask any questions. And twice we got up there, gifts right back to $15. I mean, they're doing everything wrong at this company, so maybe Ryan Cohen can clean it up. You've got great support down in the 13 area, $2 lower than here. I do think it'll bounce between 13 and 15, even 15, for the simple reason is that people will say, well, Cohen will fix it. So it would not surprise me if this actually holds up better. Other things being equal, I never would buy a company that was that their sales were running, the comps were running down 20%. That is absolutely terrible. In an environment that I think is going to get worse. So, but you got Ryan Cohen. That's a trump card here. Obviously, he's been involved in GameStop and other things, and people love that, and they think he'll turn it around. And you know what? Maybe he does. So I wouldn't be surprised if there's buyers here in the 15 area.
Wow. For Bed Bath.
Wow,
yeah. If I was short, I would be bringing it in.
Look at AMC and GME. Have you looked at those, Dennis? AMC and GME?
Oh, I saw
they've come back.
I saw AMC had a headline.
GME's still holding up pretty well.
Yeah, but look at the look at that 145 though. Look at that. Oh boy. Be careful here, folks. If you
wonder if the Bed Bath and Beyond won't hit AMC and GME here because they're all tied together. So we're not seeing that yet this morning. GME is still trading higher. But you just wonder, there's similar shareholders in Bed Bath and Beyond the GME, and they'll be like, oh, I'm getting killed here. I'm going to lock in some of those gains in GameStop. So I'd be nervous if I was long GameStop here.
141. I mean, just keep an eye on that. I mean, that can't be any clearer. This is like the low that you had in the SPOOs last week at 44.50, folks. So keep an eye on that. Usually don't give levels in GameStop, but that one's just sticking out like a sore thumb.
Okay, we got 7 minutes left into the show here. Let's do some ticker time.
What about that other thing you guys are gonna do?
What's that?
What other thing?
From someone that was on CNBC yesterday.
Oh, Joel.
What was the other thing? Oh, Kathy. He doesn't want to get me going again.
Joel. Why?
She was in an interview. I tweeted out numerous times. We all know what I think of Kathy Wood's investment strategies here, so I guess we don't have to go into that interview, which I'll just say the interview didn't make me feel more confident to go out and buy ARKK.
All right. That's not what we're hearing. That's not
leave it at that.
Yeah, Joel's hearing something
Don't wind me up anymore.
Joel's hearing something different, Dennis.
Oh, that I am buying ARKK?
Joel's hearing never frown, average down.
Oh, that's what she said basically in the interview. I just parsed her words, but that's basically what she said. She's like, and she says that they're going to get a 50% annual return, 50 for the next 5 years. So, but you know, you look at this.
Check out the
Come on. Who did that, Mitch?
It was not. No, it was not Mitch. It was not Mitch. It was not me either.
Well, that's ridiculous. Oh my gosh.
Somebody.
No one at Benzinga did it.
Somebody who watched
smash that like. Smash that like.
Mitch, that was you.
It wasn't Mitch. It
wasn't
Mitch. It was no one at the company. It's someone that listens to the show.
You guys. I don't even know what to say.
I was afraid to do it.
I am a closet Kathy lover, I guess.
we just want to have a little fun, Dennis. Don't be mad. I'm the one. Spencer didn't want.
It's all good.
I didn't want to do that.
Spencer didn't want to do it. He just I just dropped it on him, and he was like trying ticker time. Let's do ticker time. So that was me.
I didn't want to do that. They forced my hand. All right. All right. Drop tickers for us in the chat. Dear Lord.
Let's go to ticker time. I need to get that thought out of my head.
Okay. Let's look for tickers that we don't normally talk about. Okay. Well, how's Merck doing? Is it still ripping? No.
Let's look at Merck.
No.
I bought that at the top.
Here's the problem: is everybody's hiding in all these stocks. We talked about this. The hiding is starting to come off a little bit in some of these names. Pfizer, Merck. I own them all. They've all been actually really good, but
me too.
I just think, and I'm sticking with Merck. I think my average cost basis on Merck is $30, so I'm sticking with it. But there's a lot of money hiding in safety names, and I just think if it gets ugly enough that they'll hit this stuff too. So I think there's a little bit of a bubble in some of these safety names as well.
I bought this bad. We bought this bad, and I just stomached it. And this would be one that out of the long term where I would love to say, let's just get out, even a little bit of profit. But
Yeah,
she'll look
'cause
at
it's
the
almost at
chart. And she'll
all-time
look at the
highs.
chart and she'll say, "Why do you want to sell that chart?" I mean, look at that thing. That's what
They
she'll
all look
say.
good.
Like, why would you sell that? Why would
Why
you
do you
sell
sell
that?
rocket ships?
And and I'd be like, well, look at that red candle from 2 days ago. That was, but whatever. It's holding up. These things are holding up. I mean, I don't know. One bad day, 2 bad days. I mean, it's due for some kind of retracement. I would say if I was 85, 84.96, that's your 4-day low. Hit 85.22 yesterday. This one feels heavy. I don't even know where I'd like step in. Maybe 82 would be the next good support level if we start rocking and rolling under the downside.
Speaking of rocket ships, let's go to the hottest stock on Wall Street right now, Peabody Energy, BTU.
Oh gosh, it goes up every day. Kenny Glick,
we should
man.
all buy coal and you because that's coal's the future, didn't you know?
Yeah, the clean energy trade really. The world's not worried about clean energy in war times and recessions. I mean, Kenny, you're listening, buddy. He came and he brought us this stock at like $16 on the show a month and a half ago, and it's 29. Kenny, he's a wonderful trader. I go on his show every once in a while. I hit the bed. Kenny, fantastic call, buddy.
Well,
Dennis, he was watching Money Mitch.
Did you have this one
was
too?
at 12.
Mitch was in it at 12. Okay, there you go. We got our own guy, baby. Mitch. I didn't know that. Why didn't you send me a memo you were buying that thing at 12?
I even told you about gold, but no one believed me.
I didn't know about the Peabody Mitch call. You know I love the Mitch calls.
Here's another one.
Mitch is a trader too, I tell you. He knows some stuff.
You're saying Jamie Dimon sounds alarm on economy is basically.
That's what I want to know.
He was listening to pre-market prep.
That's what I want to know.
Jamie Dimon listened to our show and then went on his call. And
he waited. He waited to make the.
He waited until our show, and he's like, "Okay, yeah, I think Dennis is right."
Man,
another one.
We love you, Jamie.
Can I just?
I'm a shareholder.
Can I just say, if you have several decades till your retirement, just keep on keeping on.
The average, okay, and we should say that.
Just keep on keeping on, please.
Dollar cost averaging in indexes works in the long run.
Please.
Stock picking's a different story, but in the indexes, it does work. Your dollar cost averaging, you probably do well. 10 years from now, I'd be happy. I'm just, I'm a market timer, so it's not my cup of tea. I'm here every day. I feel like I need to extract alpha and do a little bit better than the average bear, so I try to time it.
All right.
But if you're not into market timing, dollar cost averaging on your index is a perfectly sound strategy, and I won't argue with you.
All right. I'll let you guys finish up. I'm going to go talk with Al Lewis from Webbush about wheat and commodities, which we want to know.
Where's
about.
wheat?
All right, everyone.
Commodities.
Commodities are still hot.
I've been meaning to read this article in the Times about that wheat, the wheat whale from a few months ago. I haven't gotten around to it yet. But we got to wrap the show up. Yeah, remember when the wheat futures went like limit up for like 2 days in a row or whatever? I haven't read it yet though. We got to wrap the show today. Now, well, this is the time we end every day, but we got to go on over to special show coming up right now. Our monthly Benzinga bootcamp. We're going to start the show off with live trading. So you're going to get, an hour plus, an hour and a half-ish of Ryan, Zunaid, and Mitch coming up right now. And that will be the first chapter of today's Benzinga Bootcamp. This is our monthly show that we do, a full day of just trading education, hearing from guests, hearing from traders about their strategies in elongated sessions. So that's going to go live right now. I'm going to end this show, send you over to that. Hit the like, please. Let's see how many likes we got going on today. We got 466. Let's get to 500 likes. That's not a very big ask in the next 30 seconds. Thanks to our guest today, Frank Holmes. Please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. I'm done. We're going live to the boot camp. Live training is going to kick it off. See you guys over there, and good luck today.